ever get curious about like the behind-the-scenes forces that kind of shape the financial world?
Right.
Today, we're doing a deep dive on a company you might not know by name, but you definitely feel their impact. MSCI.
Yeah, they're like the architects of Wall Street.
Oh, interesting.
In a way, they design the blueprints for how, like, literally trillions of dollars get invested. You sent over their annual reports from 2021 to 2023, which is great because even if you don't live and breathe finance, MSCI's work, it impacts everyone.
Totally.
Climate change, social responsibility.
Yeah.
The whole shebang. We're going to unpack all of it.
Yeah, it's not just about understanding one company's balance sheet or whatever.
Right.
It's about understanding where investing, like the whole future of investing is going.
Right. Exactly. And we're going to break down the complex stuff simply, but we're not shying away from the juicy details.
Okay. Love it. So to kick things off, can you just paint a picture for me of what MSCI actually does?
Right.
Because I was flipping through the reports.
Yeah.
Leading provider of critical decision support tools. Sounds a little vague.
Fair. Think of it this way. When, like, really big investors, pension funds, asset managers need to make a decision, they turn to MSCI for guidance.
Okay.
They provide the research, the data, the indexes that tell these big investors what's hot and what's not.
So they're like advisors kind of whispering in the ears of the financial giants.
Precisely.
Okay.
And their influence stretches beyond just Wall Street. They're super involved in ESG and climate solutions, which we'll get into later. But first, elephant in the room.
Let's talk about it.
MSCI's been on a winning streak financially.
Yeah. Those numbers jumped out at me. Their operating income went from $687 million to over $1.2 billion in, like, no time.
It's a lot of money.
That's enough to fund, like, a small country.
Right.
It's a lot of money.
It's massive growth. And their net income follows a really similar trajectory, which signals to investors that they're delivering value.
Okay.
Speaking of which, one detail that's really interesting is their aggressive share buyback strategy.
Yeah, they're like, we believe in our future so much, we're betting on ourselves.
Exactly.
But break that down for me. What's the strategy there?
It's a power move. It shows confidence.
Okay.
By buying back their own shares, they reduce the number of shares that are out there, which can increase the value of the remaining shares.
Got it.
So it's a way to reward their existing shareholders and kind of demonstrate this belief that the company is undervalued.
So win-win. They boost their stock value and reward investors who are like, yeah, we're with you.
Essentially, yeah.
Wow.
And that kind of confidence, especially in a market where everyone's like a little nervous, speaks volumes.
Yeah.
But their success goes beyond just like, crunching numbers, raking in profits.
Yeah.
What really sets MSCI apart is this focus on something that's becoming so important these days, ESG and climate-conscious investing.
Right. So it's not just about making money. It's about making money responsibly.
Yes.
And from these reports, it sounds like they're all in. All right. So before the break, we were getting into MSCI's big push into ESG and climate-conscious investing.
Right.
It's one thing to say you care about these issues.
Yeah.
But I'm curious to see how that translates into, like actual concrete actions.
Yeah, they definitely walk the walk on this one.
Okay.
One example that I thought was really interesting is this thing they call ESG business involvement screening research.
Okay.
So imagine you're an investor and you're concerned about, like, let's say, the use of child labor in supply chains.
Right.
This research is almost like it's like a spotlight that illuminates which companies are actually involved in those kinds of practices so investors can make better decisions.
It's like they're providing like an X-ray into the ethical practices of companies all over the world.
Exactly. And they don't just stop there. They also have this other thing that they've developed called Climate Lab Enterprise Analytics.
Okay.
With climate change becoming, like a major economic factor.
Yeah, for sure.
This tool basically gives investors a crystal ball to assess the climate-related risks associated with their investments.
Okay, that sounds really cool. Can you give me an example? Like, how would that actually work in the real world?
Sure. So let's say you're an investor looking at two different energy companies.
Okay.
One is really, they're all about fossil fuels.
Right.
The other one is going all in on renewables, right?
Yeah.
MSCI's Climate Lab, what it can do is it can basically model how different climate change scenarios like stricter regulations are one, extreme weather events, shifts in consumer behavior, even might impact each company's, like their bottom line over time.
Interesting.
Yeah.
So it's not just about like feeling good about your investments, but it's about understanding how these big global trends could actually make or break your portfolio down the road.
Yeah, and that kind of like forward-looking analysis is becoming more and more crucial as investors start to realize that climate risks are financial risks as well.
Totally. Yeah, like that old saying, like, what's good for the planet is good for business.
Exactly.
But even with all this positive momentum, like, I'm sure a company as big as MSCI is not immune to, challenges, right?
Oh, absolutely. Running a global financial powerhouse comes with its share of hurdles.
Right. What are some of those? What are they worried about?
Well, one thing that they highlight in their reports is this trend of what they call self-indexing.
Self-indexing. That sounds like a DIY project gone wrong.
Right.
What does that even mean?
So basically, it's when these big investment firms, they decide, you know what, we're going to create our own custom indexes.
Okay.
We're not going to rely on companies like MSCI to give us those.
So kind of like a band that's like, we're going to produce our own album. We don't need a record label.
That's a great analogy.
Okay.
And just like in the music industry, there are pluses and minuses to both, right?
Yeah.
Some firms might decide that self-indexing is way more cost-effective.
Right.
Maybe it's better tailored to what they need.
Sure.
While others are going to be like, you know what? We like the expertise. We like the resources that an MSCI brings to the table.
Right. Makes sense.
So it's definitely something that they're watching really closely because it could cut into their market share if it really takes off.
Yeah, that makes sense. What other challenges are on their radar?
Well, they also talk about cyber attacks.
Right.
Which is a concern for any company that's dealing with like sensitive financial data.
Yeah, totally. It feels like that's just like a constant, you can never fully eliminate that risk.
Right.
It's just about trying to, mitigate as much as you can.
Exactly. And they seem to be taking this really multi-pronged approach where they're investing super heavily in cybersecurity.
You okay?
But also acknowledging that they are a target because of, their influence.
The bigger they are, the bigger the target on their back.
There you go.
Right.
Yeah.
Cyber attacks aren't the only kind of vulnerability that they point out, right?
You've been reading those reports carefully.
I've been doing my homework.
They also talk about their reliance on these third-party vendors.
Right.
For data and tech and, all this other stuff.
Right. And why is that such a potential problem for them? Like, don't most companies use outside vendors for something these days?
They do.
Yeah.
And that's the point. Like, on the one hand, it allows them to tap into really specialized expertise.
Right.
And keep their own operations leaner.
Yeah.
But it also creates this kind of vulnerability where if one of those vendors has a problem, like a major outage, a data breach, or they just totally fail to deliver on what they're supposed to do, it can really disrupt MSCI's ability to serve their clients.
So they're kind of at the mercy of,
in a way,
of these other companies to some extent.
It's a trade-off, and it's something that they acknowledge and try to manage proactively, but it's a risk that's always there.
Fascinating. So we've covered MSCI's, incredible financial success,
right?
Their push into the world of ESG and climate conscious investing, and even some of the challenges that they're facing.
Yeah.
But before we wrap up this deep dive, I want to bring it back to something you said earlier.
Okay.
About how all this connects back to, the average person, even those of us who don't spend our days glued to, the financial markets.
Yeah.
Like, what does this all really mean for our listeners?
That's the million-dollar question, and I think that's what we need to unpack next.
So we're back. We spent the last two parts really digging into MSCI, from those crazy financial wins they've had to their whole thing with sustainable investing.
Right.
But before the break, we were talking about how all of this actually impacts regular people. Like, what does it all mean?
It's easy to think about high finance as this really distant thing.
Totally.
But MSCI's story actually touches on issues that impact us all,
Yeah.
Their push for this ESG and climate conscious investing, their efforts to kind of figure out all these really complex challenges.
Yeah.
It's all part of this much bigger shift in how we think about money and its role in the world.
So it's not just about fancy financial instrument.
Exactly.
It's about shaping the future where hopefully profits and principles can coexist.
Yes.
Yeah.
And their influence, while indirect, it's undeniable,
Yeah.
They're making the tools and frameworks that are changing how trillions of dollars are invested.
Yeah.
Essentially, they're tipping the scales towards a more sustainable future.
Okay. So I get that. I see what you're saying. But let's be real for a second. Can one company, even one as influential as MSCI, really make a difference when it comes to like massive global issues like climate change?
It's a fair question.
Yeah.
Like, they're not out there building solar farms, right?
Right.
They're not writing environmental regulations.
Yeah.
Their impact is quieter, you know?
Okay.
It's more about shifting mindsets and incentives within, like, the financial system itself.
Okay.
Think of it like this. MSCI doesn't control the flow of traffic.
Okay.
But they're the ones kind of designing the maps that determine where the roads are built.
Okay. I like that.
Yeah.
So by like putting a spotlight on the risks and opportunities around ESG, around climate conscious investing, they're encouraging investors to actually take that stuff seriously.
Exactly. Yeah, and as more investors prioritize ESG, it creates this ripple effect, right? Companies that have good ESG ratings, they're suddenly more appealing.
Makes sense.
It's easier to raise capital, easier to grow.
Right.
And then on the other side, the companies that ignore all this, they might find themselves struggling, right?
Yeah, totally. It's like you said.
Yeah.
What's good for the planet is good for business.
There you go.
But let's be real again for a second.
Sure.
There are still plenty of investors out there who are all about those short-term profits.
Oh, yeah.
You know, they're not thinking long-term sustainability.
Right.
So how does this push for like responsible investing actually fit into that reality?
It's a great point, because changing a system as big and as complex as like the entire global financial system, that takes time.
For sure.
There will always be people who are going to go for those short-term gains, right?
Right.
But what MSCI is doing is providing an alternative, a way for investors who do care about this stuff to actually put their money where their values are.
Yeah.
And as more people do that, things start to shift.
Okay, so it's about options then. It's about giving investors more information so they can make smarter choices about where their money's going.
Yeah, it's about recognizing that our financial decisions have impacts in the real world.
That's a good point.
They can either continue these harmful practices, or they can drive positive change.
Yeah.
And MSCI is putting their money on more and more investors choosing to do the right thing.
I like it. It's kind of inspiring when you think about it that way.
Yeah.
It's not just about, you know, some spreadsheet somewhere.
Right.
It's about like trying to create a future that we can all like actually feel good about.
Exactly. And that takes us back to your original question, you know?
Yeah.
What does this mean for the average person?
Yeah. Like bring it home for us. How does this affect me, you know, listening to this right now?
Whether you realize it or not, you're an investor too.
Okay.
Maybe you have a 401k, maybe you've got a savings account, maybe you just have like a jar of coins on your dresser, right?
Yeah.
All of those financial decisions, no matter how small, they're part of this giant ecosystem.
So what you're saying is that even someone like me who doesn't have, you know, millions to throw around on Wall Street, I can still make a difference.
100%.
Okay.
Every time you pick a bank, you buy something, you invest in a mutual fund.
Yeah.
You're voting for the kind of world you want to live in.
Wow. I never thought of it like that.
Yeah. So educate yourself, ask questions.
Okay.
Demand that the companies you support are actually doing the right thing.
I love it.
It all adds up.
This has been really eye-opening.
Good.
We started with like a deep dive into MSCI.
Right?
And somehow we ended up with like, you know, a better understanding of like our own roles in building a better future. It's pretty cool.
It is all connected, and I think that's the biggest takeaway from all of this.
I agree. And on that note, thanks for joining us on this journey.
My pleasure.
And to everyone listening, keep asking those questions, keep learning, and keep making those conscious choices. Until next time, keep on diving deep.